Hi everyone and welcome to the We Are Gonna Make It podcast show. The podcast where we explore the cutting edge world of emerging tech in just under 15 minutes. I'm your host Harshdeep and today we're diving deep into one of the most intriguing topics in the cryptocurrency realm. It's called Bitcoin ETFs. So get ready because we're about to embark on an informative and captivating journey through the ins and outs of this exciting development. Let's start by taking a moment to reminisce about Bitcoin's incredible roller coaster ride. Cast your mind back to the late 2017 when Bitcoin shattered all records, surging past $19,000, only to experience a dramatic plunge to under $4,000 less than a year later. It was an insanely wild ride. But that was then, and now we stand on a precipice of a potentially game-changing event. The introduction of Bitcoin ETFs that could receive an approval from the Securities and Exchange Commission in the United States. So what exactly is a Bitcoin ETF? And why is it generating such fervor among investors today? Well, Bitcoin exchange-traded funds or ETFs are financial instruments designed to track the value of Bitcoin and in some cases other assets as well. While they have already gained approval and traction in countries like Canada and Brazil, the US has yet to fully embrace them due to the concerns over the unregulated nature of the cryptocurrency market. Now that we have an understanding of what Bitcoin ETF is, let's dive into the mechanics of a Bitcoin ETF. Essentially, it functions similarly to traditional ETFs, and instead of directly owning the underlying asset, which is Bitcoin, investors can purchase share of an ETF that mirrors its value and may include a diversified basket of other assets as well. This approach has already proven effective and efficient in traditional securities in the stock market. But why not buy the Bitcoin directly? Well, owning the Bitcoin has its advantages. It allows for direct trading without intermediaries, providing greater control over this dynamic asset. Bitcoin's volatility presents opportunities for lucrative gains if timed correctly. Just remember its incredible rise followed by a subsequent fall and a resurgence over to $60,000 in April 2021. While Bitcoin's volatility can be enticing, it's essential to recognize that investing in cryptocurrency has its own challenges. With its long history and well-established rules, the stock market offers a familiar landscape with trusted names to guide investors. And on the other hand, investing in Bitcoin can be a vastly different and less predictable journey. Moving on to the other traits, accessibility plays a significant role in investment decisions. Crypto investing can involve a steep learning curve and numerous technical hoops. In contrast, ETFs have been around for decades now, and the traditional stock market provides a user-friendly environment with a wide range of reliable brokers. Furthermore, liquidity is a crucial factor to consider here. Bitcoin is generally easier to sell than many other assets, but a Bitcoin ETF would likely attract even more attention from financial managers, institutions, and robo-advisors. This increased demand would enhance the trading volume and liquidity of the ETF, making it easy to sell as raw Bitcoin. Now let's address the safety and security aspects of Bitcoin. While owning Bitcoin requires personal management and security precautions, a Bitcoin ETF would be managed by a large company with a robust security and insurance infrastructure. This combination of professional management and inherent diversification of ETFs provides a resilient and safe option for even the most cautious investors out there. And regarding taxes, well, we all know attempting to avoid them can lead to significant risks. This is where ETFs once again prove their worth. Trading ETFs can make gains largely non-taxable, and additionally, ETFs offer the opportunity for tax loss harvesting, which is a strategy that involves selling assets at a loss to offset capital gains taxes in the future. If you want to know more about tax loss harvesting, we've already done an episode on that, so do be sure to check it out. Now, with any investment vehicle, there are always downsides to consider. While ETFs generally boast a low expense ratio, actively managed funds might be relatively pricey. This becomes particularly relevant in the case of Bitcoin ETFs, as they may require additional human oversight due to Bitcoin's potential for sharp price swings. ETFs also exhibit varying levels of liquidity, with the most popular ones typically having the highest liquidity. However, liquidity tends to decrease as an ETF nears the end of its lifespan, a factor which is beyond individual investors' control. Another important consideration is the potential impact of ETF diversification on the overall gains. While diversification helps protect against drops in value for a particular stock, it can also limit the magnitude of gains during significant price spikes. Given Bitcoin's historical volatility, with its wild fluctuations from as low as $1 in 2011 to as high as $60,000 in 2021, the diversification offered by an ETF may act as a double-edged sword, which means providing cushion against value drops, but potentially curbing the profits during meteoric price rises. One other major downside that I particularly consider to be true is the need for direct ownership of the cryptocurrency here. Bitcoin can be freely exchanged with other cryptocurrencies like Ethereum, a feature that ETFs can't provide. And I say this positively because the DeFi ecosystem has advanced to a great level now, and people can easily exchange one cryptocurrency for another. Alright, now that we have a fair understanding of what a Bitcoin ETF is, let's address the burning question. When can we expect a Bitcoin ETF in the United States? The answer, unfortunately, is not straightforward. The SEC has been cautious in granting approvals due to the concerns surrounding market regulation and potential manipulation. Several notable attempts by companies like Winklevoss and Grayscale have been rejected, highlighting the challenges of gaining SEC approval. There is optimism, on the other hand. There have been recent approvals of Bitcoin ETFs in countries like Canada, Germany, Brazil that demonstrate a growing acceptance and recognition of the cryptocurrency market's maturation and self-regulation. Additionally, the SEC has outlined clear conditions for ETF approval in its ETF rulebook, eliminating much of the guesswork for companies seeking to launch Bitcoin ETFs. The path towards a Bitcoin ETF in the US may still have obstacles, but the cryptocurrency market's progress, combined with the growing acceptance of blockchain technology, nudges us closer to the potential approval. As for the bonus segment, we're going to be switching gears and discussing the recent developments in the Bitcoin ETF landscape that might have caught your attention recently. While several ETF issuers such as VanEck, ProShares, Invesco, Valerie, and ARK have previously filed applications to launch spot Bitcoin ETFs, all of them have been rejected by the SEC. However, last week, the landscape took an unexpected turn when BlackRock, the world's largest asset manager, filed to launch its own Bitcoin ETF. This is significant because more than 30 different Bitcoin ETF filings have been made in the past, but they still need to make it to market successfully. So what makes BlackRock's filing different? And what are the key questions surrounding it? Well, to understand that, it's essential to delve into the background of Bitcoin ETF rejections. The SEC's concern have centered around the unregulated nature of crypto space, which it believes leaves room for potential fraud. While these concerns are not unwarranted, it's worth noting that existing Bitcoin exchange-traded products have yet to encounter significant issues in terms of structure and functionality. So interestingly, spot Bitcoin ETFs already exist, but they are unavailable in the United States. Canada, for instance, has several Bitcoin ETFs currently trading, including the highly popular Purpose Bitcoin ETF. Canada's regulators are often considered more flexible than their US counterparts and have been more receptive to launching products related to blockchain, cannabis, and other emerging sectors. Conversely, another strange thing is that the SEC has approved Bitcoin futures ETFs, as future contracts have already received regulatory approval. This has led to numerous futures-based ETFs that don't directly invest in Bitcoin but have been given the green light. One notable example is the ProShares Bitcoin Strategy ETF, which has accumulated nearly $1 billion in assets. Additionally, there's also Grayscale Bitcoin Trust, a product that has been around for almost a decade now and has amassed over $16 billion in assets. And before the introduction of Bitcoin future ETFs, GBTC, which is Grayscale Bitcoin Trust, was the go-to option for investors looking to add Bitcoins to their portfolio without directly purchasing it. GBTC's structure as a trust rather than an ETF has led to significant deviations in its market price compared to the underlying value of Bitcoin holdings, which means it sometimes trades at a premium and sometimes at a discount. So coming back to the important question, why would BlackRock file for a Bitcoin ETF now? After all, numerous spot BTF filings have been rejected in the past, and the SEC recently sued Coinbase, the proposed custodian for BlackRock's product, over alleged unregulated exchange operations. The timing seems curious. Well, it's worth noting that BlackRock and Coinbase have a pre-existing relationship, having previously partnered to provide crypto access to BlackRock's institutional clients. Another intriguing theory suggests that BlackRock's filing could be a strategic play akin to a three-team trade in the financial markets. This theory revolves around the SEC's concern about retail investors entering into an asset that they may not fully understand. If the SEC were to gain regulatory oversight of the crypto exchanges, it could remove a significant obstacle to approving a Bitcoin ETF in the end. While this scenario is far from guaranteed and would likely involve a legal battle, it hints at the SEC becoming more comfortable with Bitcoin in the future. So what do you guys think? Will the SEC finally approve a Bitcoin ETF? Well, according to me, we need to see some changes in the regulatory landscape or the SEC's stance on Bitcoin and exchanges before we can imagine how an ETF would be approved when previous filings have been rejected. Nevertheless, it's essential to recognize that BlackRock's decision to pursue crypto products indicates a compelling reason, even if the reason has yet to be apparent. And amid these developments, Fidelity, another major player in the asset management industry, is reportedly preparing its own Bitcoin ETF filing. While this alone is noteworthy, what's truly intriguing is the possibility of Fidelity acquiring Grayscale, the firm behind GBTC, which we discussed a moment ago. Grayscale has expressed its intention to convert GBTC into an ETF, but the SEC has rejected the conversion, which has led to a legal battle. If Fidelity were to acquire Grayscale, it could be a dominant player in the Bitcoin ETF space. Imagine this scenario where BlackRock has successfully launched the first Bitcoin ETF, followed by Fidelity's conversion of GBTC into an ETF armed with a $16 billion asset base. And even if the conversion doesn't occur, Fidelity still could benefit from a 2% annual fee on the existing GBTC product. Either way, it's a win-win situation for them. Alright, wrapping this up, so as we eagerly await further developments in the Bitcoin ETF saga, one thing is clear. The path to approval remains uncertain today, and whether it takes 1 year or 10 years, the SEC will likely arrive at a point of comfort with Bitcoin and its related instruments. Until then, we'll continue to follow these fascinating developments and keep you informed on the future episodes of WGMI. That wraps up today's in-depth exploration of the Bitcoin ETF landscape. Thank you for joining us on this captivating journey through emerging tech. Remember, at WGMI, we're committed to unraveling the complexities and uncovering the opportunities that lie ahead. And before we leave, like we always say, we are gonna make it. Goodbye.